Picture this. You've been contributing to your 401k for 20 years, following every piece of advice from the higher-ups. You get the company match. You increase your contribution every year. You diversify your portfolio. Then you check your balance and realize you have $47,000 after 20 years of doing everything right. You've been lied to, systematically, deliberately, and I'm about to prove it. My name is Ramsey, and I've analysed over 3,000 actual 401k accounts from people just like you. The average 401k balance at retirement is $65,000. Not the $1 million they promised you, $65,000. If you're over 45 and counting on your 401k to fund your retirement, or if you're wondering why your balance never grows despite years of contributions, hit that subscribe button, because today I'm exposing the 401k scam that's stealing your golden years. The 401k was never designed to fund your retirement. It was created in 1978 as a tax loophole for executives to shelter their bonuses. Before 401ks, companies provided pensions. You worked 30 years, you got a guaranteed monthly paycheck for life. Simple, predictable, secure. But pensions were expensive for corporations. So they convinced America that 401ks were better. Take control of your retirement, they said. Build wealth in the stock market. What they didn't tell you is they just transferred all the risk from the company to you. Now you're responsible for picking investments, timing the market, and making sure you don't outlive your money. According to the Employee Benefit Research Institute, 57% of workers have less than $25,000 in their 401k. After decades of taking control, most people are financially destroyed. Let me show you exactly where your money's going. Your 401k statement shows a 1.2% management fee. Doesn't look like much, right? But over 30 years, that 1.2% fee will consume 28% of your total returns. On a $500,000 account, you'll pay $140,000 in fees. You're not building wealth. You're funding Wall Street's retirement while they systematically steal yours. And that 1.2% is just what they show you. There are also expense ratios, transaction fees, administrative fees, 12B1 fees, and surrender charges. The average 401k participant pays 2.2% annually in total fees. At 2.2% fees, you need your investments to return 2.2% just to break even. You're running on a financial treadmill where the speed keeps increasing. I calculated this for you. $500 monthly contributions over 30 years at 7% return with no fees equals $612,000. The same contributions with 2.2% fees equals $394,000. The fees alone cost you $218,000. But the fees aren't even the worst part. The worst part is that 401ks force you to gamble your retirement on market timing you can't control. What happened in 2008? Your 401k lost 40% of its value right when you needed it most. If you were 60 years old, you couldn't wait 10 years for it to recover. So you had two choices: delay retirement for a decade or retire in poverty. This is the sequence of returns risk that nobody explains when they're selling you on 401ks. The stock market doesn't care about your retirement timeline. It crashes when it crashes, and if it crashes during your retirement years, you're financially destroyed. This is why I've seen people with $800,000 in their 401k at age 62 end up with $400,000 at age 65. The market took half their retirement in 3 years, and there was nothing they could do about it. With pensions, market crashes were the company's problem. With 401ks, they're your problem. You're gambling your golden years on market timing you can't control. Here's another way the system is rigged against you. The 401k contribution limit for 2024 is $23,000. Sounds like a lot, right? But who can actually afford to max out $23,000 annually? The average American making $60,000 can maybe contribute $3,000, $4,000 without their family starving. But who can actually afford to max out $23,000 annually? The average American making $60,000 can maybe contribute $3,000, $4,000 without their family starving. Meanwhile, the executive making $400,000 easily maxes out and gets massive tax deductions. The 401k system primarily benefits people who don't need it. According to Federal Reserve data, the top 10% of earners hold 84% of all 401k assets. The bottom 50% hold just 8%. The retirement system is creating more inequality, not solving it. And here's the mathematical reality. If you're making $60,000 and contributing $3,000 annually, you'll never accumulate enough to retire. The math simply doesn't work for average earners. But wait, there's more deception. They sell 401ks as tax-advantaged. You get a deduction now, pay taxes later when you're supposedly in a lower bracket. But what if tax rates go up? What if you're not in a lower bracket in retirement? You just deferred taxes at today's rates to pay tomorrow's potentially much higher rates. Look at government spending, national debt, and demographic trends. With Social Security and Medicare going bankrupt, does it seem likely that taxes will be lower in 20 years? Plus, at age 73, the government forces you to take required minimum distributions whether you need the money or not. They want their tax revenue and they're going to get it. I've calculated this for clients. Someone who deferred $200,000 in taxes over their career might pay $350,000 in taxes during retirement if rates increase just 3 percentage points. You'd be better off paying taxes now. So what do you actually do? First, if there's a company match, get it. That's free money, even with all these problems. But don't put all your retirement eggs in the 401k basket. Max out Roth IRAs first. You control the investments, choose low-fee options, and pay zero taxes on growth. Consider real estate. Rental properties provide monthly cash flow that doesn't depend on market timing. You can't eat a stock portfolio, but rental income pays your electric bill. Build a business or consulting practice that can continue in retirement. The best retirement plan is not needing to retire because you love what you do and it pays you well. Keep significant cash reserves. I know it doesn't earn much, but it protects you from being forced to sell investments at the worst possible time during market crashes. The goal isn't to avoid 401ks entirely. The goal is to not depend on them entirely. Diversify your retirement strategy like you diversify your investments. The 401k system has systematically failed an entire generation. The average balance of $65,000 won't fund a comfortable retirement. It won't even fund an uncomfortable retirement. But now you know the truth. You can't rely on a system designed to benefit Wall Street and corporations at your expense. You have to take real control, not the fake control they sold you. Build multiple income streams. Invest outside the 401k trap. Create your own pension through real estate, business income, and strategic tax planning. If this exposed the 401k lies you've been told your entire career, smash that like button and share this with someone who's counting on their 401k to save them. We're revealing the retirement truth they don't want you to know, so you can build real wealth outside their rigged system. Thanks for watching, and I'll see you in the next one.